Welcome to Wall Street Confidential. We're discussing the importance for catalysts in this market. There are a few stocks. One today, Weyerhaeuser, which reported a big lumber company, swell report.
Yeah, another stock got hit. You know, there's stocks. Yesterday, I had the Faraci, who's this CEO of International Paper, and I had this kind of like flashback vision that I'm just trapped forever in a treadmill of paper. Because there was a guy by the name of Dylan who used to be very nice, very well-meaning guy. He used to be the CEO of International Paper, and they were always announcing these restructurings. They seem to be able to restructure every couple of years. It's like they must have so many more people than they need. And the stock does nothing. The stock's down a lot since I interviewed Dylan. And I saw that report, and it was like, oh, God, well, maybe they can get the yield from 3% to 3.1. Weyerhaeuser, same thing. It's like, well, you know, they're a lumber company. We don't need a lot of lumber in a housing crisis. And the company can't sell land. International Paper can't sell land. They yield 3.5. So then you have like these two stocks that are $13 billion that maybe should be private. They don't really need the public markets. But in order to be able to generate some cash flow, but in order to go private, we need a debt market, which is now glutted by Harris and Tribune Corp and soon to be Clear Channel. So there's like nothing. They're like nothing. They're like paint dry with a 3% yield. And I just find that there's this vast, irrelevant market out there of stocks that shouldn't be public. They should just be private. And that reminds me that that's how the LBO wave started, which was that there are these companies that basically don't really need the public markets. And they can just as soon take the cash flow and do something with it. And International Paper is one of those, and Weyerhaeuser is one of those. But when you look at the fundamentals of the business, these are late cycle companies that there's no interest in whatsoever. And it just must be, it just exercises in futility to try to manage the stock at this point for these. And until we have a return to takeovers and LBOs, these companies you can't bother with them.
Do you foresee any return to the activity that we saw in the LBO market, such as in 2006 and maybe even the beginning of 2007, returning this year?
Well, I mean, I think that you have to have the Tribune's core and the and stocks like bonds like Clear Channel crater first, and you have to refresh. Everybody knows it's coming, so nobody wants to be involved.
Okay.
I mean, look, I'm not being cynical. I'm being empirical. When you look at what Weyerhaeuser, if you bought it correctly, you've made some money, but you had to really buy it correctly. International Paper, even if you bought it correctly, you've just done badly. And this is one of those stocks that I used to recommend to my investors when I was at Goldman Sachs, because we were in late cycle periods, so I'd always use it in late cycle. But then you had to sell it very quickly the moment the Fed started cutting.
So sometimes it's better to be private.
Yes.
Thank you, Jim Cramer. Wall Street Confidential. Don't go away.
That's your action point. Take advantage of it.